YouTube, what the business is. Trae X in the building. I know it's been a long minute since I done made a video, but it's a good reason. Around the time of the last video that I posted, I was getting results, but I wasn't really getting the results that I wanted. So I ended up telling myself that I'm gonna lock in and I'm not gonna come back to YouTube until I can show a real payout and show that I'm consistent. Which that led to me switching to a whole new trading system, which I'm going to get into that in this video. Now, this simple system has finally allowed me to achieve the consistency that I wanted with trading. And here we have a $3,000 payout to show for it. Actually my second payout, the second of many more to come. The certificate will be on the screen somewhere. And the first thing I had to do was take it out in cash just to have it, just to look at and motivate me to get more. And I'm not just getting on here to flex cash and show my payouts and my results. I'm doing this to show that any normal person can do this. If you can go look at my older videos, you can see I'm just a regular person who started from zero and built themselves up and still building themselves up. And with the right commitment, you can do this too. Like, anybody can do this. But that's enough of that. Let's get into the exact system and strategies that allow me to even get these results. Now with this system, I'm only going to be trading S&P 500 futures, and that's just ES or MES, which is the micro contract. I personally use micros on my prop firms. Now this is a simple system based on the 8 a.m. opening range and session liquidity levels. I only trade 2 setups with this system, and I only look for them during a specific time window, which is 9:30 a.m. Eastern time to around 11 to 11:30 Eastern time. That is New York session, and that's when the market is gonna have the most volume and momentum. Now these are 2 overly simple setups, and you don't need no indicators with this. So as you can see, the only indicators that I'm showing is the range, the session indicator. This show, and all this does is show the Asia session, London session, and New York session. It highlights them and marks it out in the box, so I don't have to check which time each session is. So every morning I'm gonna start on a 15-minute chart, and I'm gonna grab this rectangle tool right here, and I'm gonna mark the high and low of the 8 a.m. candle that printed on the 15-minute chart. So this is gonna create our opening range box. So 8 a.m. orb, we call this our 8 a.m. orb. Now this is one of the most important levels on our chart, because this is where the big dogs and the institutions like to get into the market. And when price reaches this level, oftentimes it's gonna have a strong reaction, and that's where we're gonna be looking to take our entry. Now next, we're gonna mark out all untouched session highs and session lows. Now these act as liquidity pools, and what that means is there's a bunch of orders sitting at these levels, and price is oftentimes gonna have a strong reaction. The market naturally is moving from liquidity to liquidity, so it's moving from to take out one high to take out another low, or to take out one low to another high. So these levels are magnets for price. So in this situation, we have this untouched Asian high right here, and I like to mark out the highs in red, because when we reach a high, we're often looking for a rejection. And I like to mark out the lows in green, because when we reach these levels, we're looking for a bounce. So now you know how to mark out the 8 a.m. opening range box and session highs and session lows. So we have untouched Asia high, untouched London high, and this untouched previous day New York high. Now with the opening range box, all we're simply looking for is a break and retest. So we're either looking for price to break out to the upside and retest into the midpoint, and we will be looking to get in for a continuation to the upside. Or we're looking for a price to break out to the downside, retest into the midpoint, and get in for our continuation to the downside. That's all we're looking for with this opening range box. So this example right here, we broke out to the downside. Now it's after 9:30, so now we're gonna wait for price to retest into the box. So boom, now you see we're retesting that midpoint. Now what I want to see when price gets to the midpoint, I'm going to be scaling down to the 5 minute and the 1 minute and the 3 minute chart. And I just want to see, all I want to see is for price to slow down. Let's go to the 5 minute. I just want to see price to either slow down in this area, or I want to see price wick this midpoint at least 2 times. So in this situation, you see we wicked the midpoint 3 times, so I would have already been in for sales or for shorts. So, and I like to have at least a 5.4 to 5 points. I never go larger than 10 points depending on the size of the orb opening range, but 5 points in this situation, I'm gonna have a 5-point stop loss. And what you can do, you can either target liquidity levels, which is low, just lows that they made, or the session lows, or you can, I like to just go for the 1 to 3 risk to reward. So this situation we're in for shorts right now, let's see what happens. Boom. So you see we got 1 to 3 risk to reward easy off the break and retest. So now we're gonna go through an example of a retest to the upside. So we have our session highs and our opening range box marked out. Now sometimes you will see price trade through the orb like this. That does make it low probability, but if it has a confluence, like we're sweeping a session low before the open, you see we swept this London low and we're continuing up back above the orb, that does give confluence to take a break and retest. So we see prices breaking out to the upside after the open. This is why we wait to after the open to consider a setup to let price do what it do before the open. But so we see we're breaking out to the upside, we come back to the midpoint, we tap it 1 time. I'm not entering on that first tap. I want to see confirmation, real confirmation that we're holding and respecting this level. So boom, we get another tap. I would have been in right here, somewhere up in here. And you're not gonna always get your entry right at the midpoint. Sometimes you may be a few points off, but that's okay, because we're still catching the larger move. 5-point stop loss, targeting, in this case we could target 20 points, targeting this high that we just made. And boom, you see we got that easy. So a lot of days we're going to see price just break away from the orb and not even retest, or just straight up disrespect the orb and we don't get a break and retest setup. So that is where our second setup comes in. Now we're going to be looking at where's the next untouched liquidity level. So if we zoom out right here, we see we got this untouched New York low from earlier in that week. And what I want to see when we reach this level, I want to see a bounce at this level. So I want to see price come to the level, tap it, give our confirmation, and reverse up. And if we're coming to a high, it's the opposite. I want to see price come to that level, give confirmation, and reverse down. So that is our second setup. In this situation, we will be looking for a bounce. And how I get confirmation on that is I'm scaling out to the 5 minute or the 1 minute. Personally, I like the 5 minute the most, but sometimes you do have to scale down to the 1 minute or the 3 minute. So in this situation, we tap the level and I'm not entering on this first tap. Now a lot of times I want to see an entry like this. So I want to see tap the level, give a little reversal confirmation that we finna go up, tap the level again, boom, then we get the real move. So This is the ideal way it'll play out. A lot of times it'll just do this, tap the level, reverse up one time. I personally don't enter when it does that unless I just already feel like it's really finna bounce at this level. I will take the risk, but you can have a limit set when you see prices approaching the level, but it won't always do that. A lot of times it just approach the level and just blow straight through like that and hit your stop loss. So it's up to you if you want to accept the risk to take aggressive entries, but sometimes it'll play out. So in this situation, you see we tapped the level once on the 5-minute. Now I'm gonna wait for a second tap to get that extra confirmation. So boom, we tapped the level again. Now I would be in this for long, and I like to take bounces and rejections with a 10-point stop loss and target around 30 to 40 points, and boom, we see that played out like that. Now here's an example of an untapped high rejection, and I wanted to show this example just to show that we are not predicting the market and we don't know how the market's going to play out. So now here you see we got a perfect entry and we still got stopped out. Now when this happens, you will see this happen a lot, price will stop you out. You don't want to get down and be like, oh, I just took a loss. Pay attention to what the market is doing in that moment, because a lot of times you'll get stopped out, and that's just simply because our stop loss is not big enough. You can take it. Price will literally give you a chance to re-enter. If you scale down to the 5-minute after we got stopped out, or to the 1-minute after we get stopped out, price immediately starts reversing back down, and you can take another entry somewhere up in here with the same stop loss, or even smaller if you want, and with the same target, and it got hit. So a lot of the times you'll get stopped out. Don't worry, that's a part of trading. You can't be scared to take the next trade if it presents the next trade. Now if you don't see price presenting another trade, then you just took the loss and just take the L for the day. But a lot of times it's going to be situations like this where you get stopped out, but the bias is still playing out, so you can't be scared to re-enter. Now we just went through everything that I do trade. What do I not trade? So things I'm not going to be trading is if price just taps a level one time and just takes off. I typically don't trade after 11. So most of the time around 10:30 I'm stopping. If I haven't took a trade, I'm stopping for the day, and I'm probably not gonna take a trade for the day. So outside of my session times, I'm not placing trades and choppy price action. So especially on the 15-minute, if price is just moving like this, oh shit, if you see price moving like this and there's no real direction, that's when you're not gonna want to place a trade. Like, and a good example is this whole range right here from this week. When price is moving like this, we're not gonna want to be placing any trades, because that's choppy price action and you're most likely gonna get stopped out. 2 trades max a day. I only take 2 trades a day, and if I lose twice, I'm done for the day. And the reason I'm taking 2 trades a day is because sometimes I will get stopped out and then price will give a re-entry. Like I said earlier, that's the only reason I take 2 trades a day. If I win on the first trade, I'm done for the day. The biggest edge in this system is not the 8 a.m. or not liquidity levels. It's patience. Waiting for the right confirmation when price reaches a level, waiting for price to even reach a level, and only taking A+ setups. You gotta have patience. Without patience, you're not gonna be successful with this strategy. You're not gonna be successful with any strategy without patience. So that's a big thing that you gotta master with trading. So that is my entire trading system that pays me like these. If you want to get paid like these, lock in, learn trading, man. Hopefully y'all learned something from this video. 2 setups, 1 time window, clear risk management, strict confirmation rules is the name of the game. If you found value in this, leave a like, subscribe, comment anything you confused about. I will be making more breakdowns, more in-depth, and I will be doing more live trading videos. So stay tuned, man. Let's get this bread. I'm out.